Well, hello. I'm going to prep for my night shift. See what I'm talking about. Hi, welcome to the channel. If you haven't been here before, my name is Langers, and I am the overgrown child that is the Scruffy Trader. And what I'm trying to do is kind of put trading in the real world. Maybe show you a trick or two along the way. If that sounds good, please click the little subscribe button. Genuinely helps. And if you like this sort of thing, smash the like icon. So what is the night shift and why am I preparing it? Because obviously I do this for a living. Well, I've done something a bit daft. I was talking to the guys, and there's a few of them that I speak to on a regular basis. And for whatever reason, they can't trade the London session. Some live overseas, some work, that sort of thing. So what I said I would do is I would trade the Asian session. Now this is well out of my comfort zone, because for all I've traded over 15 years, I've never traded the Asian session. I've never had to. I live in the UK, so my day starts 7 in the morning. I'm wrapped up by 7 o'clock at night, as would any other normal person. Why on earth would I get up at midnight to trade? So I've never had to. So a lot of the markets I'm looking at are going to be quite alien to me. I have an understanding of the movements, but the characteristics of the market, now there's something else. So I have to do a little bit of prep work. And that's exactly what I'm doing right now. And today I had a good live stream this morning, and I was explaining to the guys a little bit about what I do. And following on from that, I am prepping for, talking of prep. Oh, and this is the one thing that I definitely need tomorrow. Hold on, we'll find out. Are you going to stay up with me at midnight tomorrow?
What, you want me to be awake at midnight?
Well, who else is going to make the coffee?
I'll get you a flask.
Flask. That'll be no then. Making me own. See, we all know Scruffy likes a coffee, but she doesn't like Scruffy as much to stay up till midnight. She's sticking her fingers up at me as well. Isn't that disgraceful? Isn't that disgraceful of a good wife to abuse her husband? I wish she would abuse me. Hold on, I'm having a moment.
Well, hello. Ding dong.
Sorry. It's going to be a late night one, so that means it's late night viewing. Sorry, nearly got off on one. What was I saying about preparation? Yeah, as I was talking to the guys in the live stream, the live stream that I do on a Sunday morning is basically me preparing for the coming week and just having a general chit chat. So I'm following on from that, and I'm preparing for tomorrow night. So the principle that I use is a very old principle, and it can be applied to most industries. But for today, it's for the instruments I'm potentially going to trade tomorrow night. And it is the 3 W's. No, it's not Wonder Woman followed by One Division.
Matron, take them away.
It is who, why, what. Okay, so put that on there. So it's the who, the why, and the what. So what does that essentially mean? Well, first of all, I'm going to have a look to see which instruments that I like. So that gives me the who. So I have to do a little bit of research into what not only a product that I like, but a one that is capable of giving me some earnings. Now I can do that using the current pie charts that are around showing the various volumes and liquidity. Here you are.
Look at that!
And this shows you not the movement of currencies. You see, the biggest currency market out there is the euro dollar. it equates 28-29% of the marketplace. And bear in mind that marketplace is worth 5 trillion a day. It is massive. But it doesn't move as aggressively as, say, the pound yen. You know, it'll move 3 times as much as what the euro is. What the difference is the spread. So when people are talking of volume and liquidity, it's not so much how far the product will move, it's how many transactions are being taken place. And because there's a huge volume of transactions, the spreads tighten up. So I have to look at that because I need the cost of the product. So under this, that is my primary thing. What cost is it going to be? Because if the spread is huge, there's no point trading it. Because by the time I've covered the spread, the move could be over and it kind of becomes a little bit pointless. So the next part of the whole equation is, why am I trading? What is it about the marketplace that I'm going to trade? Well, the first why is it's open. So by definition, I'd be looking for Asian Pacific currencies, i.e. I'd be looking for JPY, AUD, and ZD. And each one of them will have their central banks open. So that's going to help me. Okay, so that gives me who I'm going to trade, cost of what I'm going to trade, and why I'm going to trade it. But the next part of it is, and this is the interesting part for me, is the what. Now, the what is what characteristics are those markets going to give me to enable me to trade. Well, that's where the ATR comes into it. So the what is the ATR, and I need that ATR to be a whole lot bigger than the spread. So what I'm looking at, just for example, if I'm looking at a spread of 5, okay, I need, within a 4-hour period, the ATR to be 20 minimum. Why is that? Because I work on hourly charts, so I go in expecting to be in for a few hours, so a 4-hour candle, shall we say, and I need to know the movement within that period is 1, going to pay me the spread, and 2, going to pay me around 10 pips. So it wants to be 4 times the spread. This is just rule of thumb. So that gives me the who, the why, and the what of what I'm looking at in the markets. Now, there are other tools that I use. You see me with my spreadsheets, cost calculators, etc. I can look at, say, I want a trade to be a percentage of my balance. Simple stuff. In fact, I'll show you here. Okay, guys, so I'll quickly show you what I mean. Now, I use spreadsheets with pretty much everything I do. I record a lot. Why do I do that? So I'm never going into anything blind. So when I'm looking at the who, why, what's of this world, and I'm working things out, I do separate everything. So my stops are completely separate to my trade idea is completely separate to my risk. And that way it means I control it. And I control it subjectively. Now in this case, we're looking at positions we potentially want to get into. And if I am targeting a certain percentage of my balance, I want to know what the money value is, and I also want to know what the pip count is, And if I can understand what the pip count is, I can then look at the spread to see how far it has to go, and then look at the ATR to see if I'm basically in the right ballpark to make some money. So that's what I use this for. My bid size is always here. So for argument's sake, say we're just starting at 50 pence. So my 50p is there. It tells me what my next bid is. Okay. But up here, if I am looking to get 1% growth per trade, so my starting balance is £500 for argument's sake, I put in 1% there, it tells me straight away I'm going to make a fiver if I achieve it, and I need to be targeting around 10 pips. So if I'm looking at levels, I need to see if there's a 10 pip gap between where I'm getting in and the next level. And I also need to take into account what the spread is. So I need to see if that's within that gap. Then I look at the ATR and I see if it all marries up together, and that's what this is. But if you had a massive account, say you're on sort of, whoop, oh, it's a bit big, put it into realistic, into something what a good sized trader would be, and you're trading £25 a point for argument's sake, and you're looking for a 1% growth, means you're targeting 500 and you're looking for 20 pips. So it keeps what you are doing grounded and realistic in relation to your account size. And when you start working along those sort of lines, what I'm talking about on the whiteboard starts to make sense. Okay, so I hope that kind of gives you a rough idea of what I'm trying to drive at with who, why, what. So let me go back on the board and I'll explain a little bit more. And why is that helping me? Well, the reason why that kind of helps me, it could be anything. You can 0.1% if you've got a huge account. If you've got a small account, you can have 5%, whatever. It doesn't really matter. It gives you a basis as to what you're initially going to target. Okay, so your first target point, for argument's sake, pulled out 10 pips. That would be your first take profit. And then you look at your ATR to see if that can be done. And then you look at your spread to make certain that it's all within the affordability. And that's what we do. But the takeaway from today is really who, why, what. And it's how to start breaking down the products that you're potentially looking at. So because I am doing the Asian session, which for me starts at midnight, markets start moving around between 11 and 12, but it kicks off at midnight. And ideally I want it over so I can literally go to bed and have some kit. So I need to do my homework first. So I'm doing it now. Now, just looking at this doesn't necessarily mean I have to be in Forex. There's certain products that trade 24 hours. Metals, for argument's sake. I can have a look to see if there's any setups in the metals. Oil, I can look to see if there's any setups in oil. And then finally, what I will be looking at, and it was kind of one of the subjects of today's stream, is I'll be looking at the indices that are over there. Primarily, I'll be looking at the Australian indices and the Nikkei, because both markets are going to be open. They are pretty active, or active enough for me to see some movements, and hopefully we'll get a result. So it's just a very quick video. It's really just a memory jogger for the guys I was speaking at today, and echoing a little bit about what I was trying to explain, probably badly, and how my little mind works. But I do break it down into various things, and that's what I recommend with your trading. Break it down. Today I was explaining about checkpoints and how I like a minimum of 3. So it's a level, it's an overstretched. It could be a moving average. It could be anything, but it's just parts of confirmation. Because if you're going in just thinking that you need one indicator, and when it says go, you go, you'll find you're on the wrong side of the trade a lot more than you're on the right side. But if you start adding extra layers to it, but they have to be in relation to each other, you'll find that your jigsaw becomes a little bit clearer. Hope that all kind of makes sense. So there we go. Keep your eyes skinned over the next few days, because I'm doing Monday, Tuesday, Wednesday on the Asian. It's pretty much all I'm doing this week, and see what the results are. And as always, guys, do what you love and the money will follow. See you all in the next one.